Greetings guys, I welcome you in this wonderful video. So we're going to be learning on how to analyze step index. So this information or this knowledge is applicable to all the other indices. It is not limited to step index. So firstly, you can see that I'm on my 30-minute time frame. When I'm on my 30-minute time frame, it means that I'm starting on my 30 minutes going all the way down to like 15 and 10. So in this case, I'm using the 30 minutes as my high time frame. However, you can use any time frame as your preferred high time frame. But me, in this example, I'm just using the 30 minute going to the 15 and also the 10. Why? Because a lot of traders they are scalpers when it comes to synthetic indices, and I also prefer scalping. So firstly, in the 30 minutes or in your higher time frame, what you have to be looking for, you have to be looking for the basic market direction. Where is the market going and how is it flowing in that manner? So for an example, in this case, we are seeing that the market has been moving down. That's the first thing that is visible. It has been moving in a downtrend, which is one key point that we take home with us. And then the second thing is that now we have a problem. Why? Because previously the market has been kind of like moving in this kind of a flow, in this kind of a flow represented by my trend line. But now we can see that my trend line has been broken, meaning the way the market is flowing, it has shifted. The way the market is flowing, it has shifted. So that's what a trend line break means. A trend line break doesn't mean that it's now a buy. It means that the market has shifted the way it was flowing. So that's another thing that, okay, here in this region here, we are seeing that, okay, the market has now changed the way it was flowing before, meaning before it was flowing in this manner of this downtrend, it was respecting this downtrend, but now it has broken it. But this doesn't mean that's the beginning of an uptrend. But what it means is that, okay, there is a shift now in terms of strength, meaning the buyers, they are getting a little bit stronger. Why? Because we were expecting the corrective wave to end here and then the market continues to go down, but unfortunately it tried to end here. The sellers tried to stop the buyers here, but they failed. They tried to stop the buyers here, but they failed. So meaning here, the buyers overpowered the sellers. So what does that mean? What does that mean? It actually means that it can act as a warning. It can act as a warning, but the most important barrier, which is something that you should note as well on your higher time frame, it is the key level. The most important one, it is that level there. And also maybe this, just for educational purposes, you also pay attention to the lows. So here are the most important key levels, that as long as the high is below that one, it is still on the side of the sellers. So then how should you look at it? Let's go to our next time frame, which is the 15. So usually in the 15, that's where a lot of actions take place. So let me just erase a few things so that we can have a little bit of clarity. So here we are with our move here. We can see that, okay, on the 15 minutes there's a little bit of clarity because that's what we want. We want to see clearly what is happening. So looking at this corrective wave itself, it is now becoming a little bit of more of a powerful trend or of a powerful wave. So if you can go further into smaller time frame, you can see this as now a new uptrend. So then how should you behave as a trader here? Should you still continue to favor the sellers, or should you like go with the buyers? So what should happen is that then now you should pay attention to the waves or the moves in these smaller time frame or in this upward pattern. Remember, this is a corrective wave, but the corrective wave broke our trend line here. So then now you should focus on the patterns that are making this corrective wave. For an example, we have the resistance zone here, and then we have also another low here. So basically this region, that's where the action took place. That's where the sellers tried. They tried for the first time, they failed. They tried for the second time, they failed. And then they try again, they were basically weak. And then the buyers came in aggressively. So what you should do here, you should observe what the market is gonna do again in this area. If the market tries to slow down and then showing you signs of going up again, then that means that you can start now to look at this as some kind of buying opportunities. Why? Because this is a territory of the buyers, the small buyers that defeated the sellers here. These buyers that push the price up there, this is their territory. So you should, if you see decrease in strength, then you should look at this in terms of buyers. And if you see that the market is continuing to like flow all the way down, then you should look at it in a perspective of a seller. So that's how you should go about it, guys. Make sure that you always analyze the strength, try to detect which side is strong, and then go with it. Then when it comes to, one can ask himself, where does indicators come in? Indicators will come in then now when you want further confirmation. For an example, you can go to your smallest time frame, for an example like the 10-minute, and then that's where you're going to be observing your indicators, like stochastic, whatever indicator that you're going to be using. That's where you're going to observe it and wait for it to give you a buying signal. Now, for example, you can see here that it's showing you that price are extremely oversold. Then it means that they should be going up at any time. So you can also add it into the confirmation while you're still waiting for the price action here. So that's it, guys. Thank you for watching this video.